It is Friday, August the 19th, 2022. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your Status Chat. Well, welcome to the middle segment. In the middle segment, when I bring you something from a retail source, Forbes or something like that, I like to give you the full link to the thing we're talking about, or we're kind of glancing over at a rush. I like to give you the full thing in the description of the Status Chat over on the YouTube page where that Status Chat appears. And while you're there, do click the subscribe button and hit the notification bell so that when the weekly blog pops out, because sometimes the time of day changes depending on my schedule on that particular Friday, we'll be able to get the information to you in an expeditious type fashion. Well, I have three little sites here. The first one is from Redfin. It was published yesterday, the 18th, by Miss Lily Katz. Her headline reads, Housing Market Updates, Slowdown Starts to Ease as Drop-in New Listings Hamper Supply. We're going to take a look at supply in the South, and particularly we're going to look at what we have in our area in the very last of today's middle segment. Now, I think she's gone a little bit long here with this, with a complex multiple statement in this, where she says a number of metrics that reflect a cooling market are now leveling off. Among them, housing supply, the share of sellers slashing their list prices as would-be sellers back away in response to dampened home buyer demand. I don't think those statements are particularly accurate. Yes, we're having some price growth leveling off, but the prices are still going up. So it's still positive, so it's not level, but maybe the rate at which we're skyrocketing in our values is going, maybe that's leveling off in her term. Housing supply, I think we still have a good housing supply, and we'll look at that again locally and what our housing starts are. That's the middle. And slashing prices, nobody is slashing prices that I know about. Now, from what I see, we were already pricing increasingly high, and they were selling for $10,000, $50,000, $100,000, depending on the value of the home above list. That may be coming down, but we're still over list. We're still selling fairly well above list. So I don't see anybody slashing their prices. They may be curbing their enthusiasm, so to speak. This is maybe a good time for you to have a conversation with your sellers to say, look, okay, where we were jumping 20, 30% a year in some places, we get extremely high demand. Okay, now we're just down a little bit, but we're still up. We are still up. And that we'll see in just a little bit. We're still up. So what's worth more? 80% of something or 200% of nothing at all? We have to make the transactions work. We have to get them sold. We have to get them bought. So there we go. Now, this little section right here, I'm just going to glance through that. It's just going to attribute our mortgage rates. And what they're saying is we closed this week at 5.13. That is down from the peak at 5.81, but yet it's up 3.22 from the start of the year. In my opinion, it's not really a supply or demand issue. We still have tremendous demand, but our affordability is dropping with our mortgage rates going up. That's not too difficult. We covered that in a couple weeks back on the Home Affordability Monitor that we looked at from the Fed. Now, they'll give you some numbers if you want to digest them. They're down 17% a year earlier, but they're still 16% up from May. It's a mixed bag of numbers, and when we get to, I'll just flash through these charts at the bottom, these graphs at the bottom, they'll give you a really good idea. I do want to stop here and say the median home sales price was $373, $750, up 7% year over year. So we're still net up 7% in 1 year. That's pretty good gains for the housing market. That's still, in fact, 7% seems a little bit high. I would expect a typical thing 3 to 5 or something like that is a normal, healthy market growth. Prices have declined 5.5%, but that's from that extremely high valued position that they were in previously from $395. Now, we're just going to look at one last thing. Let me pull it up to the very top of this line. Only 2 metro areas saw a year-over-year decline in median home sales price: Oakland, California, and San Francisco. We're not in California. California is seeing an exodus, and we're benefiting from it. But it says here, according to Redfin, only 2 metro areas. We got a lot of metro areas in the United States, 325, 330, 40, whatever million people we have. Only 2 of these areas saw a decrease in price. So if you're representing a buyer and your buyer says, well, I'm going to wait till the wheels fall off and it looks like it's happening. It ain't happening yet. We're still up 8%, roughly 8%. And I'll leave these in the description of the status chat there where the link so that you can look at these all up if you want. Median sales price at plus 6.8% over year has come down from the peak, but we're still up over the beginning of January, February, March of this year. It's still up over the preceding year, and then the preceding year is up over the year before it. We see the same basic shape all through these various graphs that she has presented us. Pending sales are down 17% year over year. Well, they may be down over 2021, but 2021 was elevated a significant percent over the previous year. So we're just a little bit below 2 years ago. We're still positive. And it goes all the way down here. Now, let me find this one for you. 25% or a quarter of the pending sales under contract within 1 week. All right, so that's dropped to 25%. From what? Last year it was about 30. It's about 5% drop, something less than that, and a little less than that from 2020. Again, it's a little bit of fluctuation, but it's not scary. Days on market, homes sold in a median of 23 days. We're coming up, okay? But not like it was even this year in February. It was longer than that. And in 2020, there was percentage up from that. Now, bring it on down to the most scary one of all. 8% of listings had price drops. Well, if we were going at a pace of 20% growth on the prices and people were paying even above list price, the fact that we've seen it come down a little bit, that might be what she's talking about, leveling off. Because again, it's only 8%. We had about 8% of the price, 7 to 8% in net year-over-year gain, and we're only seeing about 8% that had price drops. That's really not a big number. What makes this look particularly scary is these lines are essentially laying right on top of each other, 20 and 21. But this is only 8% scale. So if we had this at 100, it would bring this line way down here, which would make it a lot less visually impactful when you see that. All right, I think if we're looking at anything else in this, I don't think we really need anything. More price drops than any other time since 2015. Oh, big duh, it's only 7%, 7.8%. Let's look at housing starts, because we're beginning to hear a lot of people talk about, well, we never built enough houses in the first place. Well, that really isn't true. What we did is we changed our taste, and we went from the 1 and 2 family homes to more of a share in the 5 or more residential, because we didn't have a lot of people, massive numbers of people living homeless on the street, did we? They went somewhere. So the housing market we see down here, it kept up the build with what we needed. What we saw is we kind of scared people away. In 2008, we did have a little bit of a crash, but look what we had. We had unprecedented growth right up to that point. We did have an adjustment, and it took us about 2 years before we turned it around and started growing positive again. Well, where we are is in the yellow, in the green rather, and I need to make sure I give credit to Morgan's Daily News. This is from their housing data and their housing start page. So let's roll this on up toward the top. We're in the south. Now, when I put my mouse over that dot, it makes our housing starts in the south show up. And what are we seeing? We're seeing a little bit of a trend from the peak of 2022, but if you take it sideways up here, it's really not significantly down from any other period. And it was certainly a lot lower. We certainly had a lot fewer housing starts during all these good years, right? During all these good years, we were having a lot less housing starts. So we really weren't underbuilding. We just switched to what people are building. And in the Bureau of Labor Statistics, where I think I saw this broken down, we are switching a little bit more in the residential numbers from single family homes to the multifamilies, the 5 or more. So there is a little switch in taste there, and we may go back to that as people who would normally try to purchase a single family home go into something a little larger, a little more dense community. So what does this mean? We looked at those numbers at 23 days on market. Let's see what we have for us in our market. Now, this is my personal website. This is the tab MLS at a glance, and let me roll this toward the top because I want to make sure we have plenty of visibility. They were talking about inventory, that they're trying to make it sound as if our inventory is shrinking because we don't have the housing starts, while simultaneously saying our inventory is growing because homes are not selling. Well, where are we in our MLS. Now, these are all for 3.2s in our area. We did see a quick turnaround as mortgage rate starts to smack us a little bit, but we're at 13.3. This is our homes for sale in the MLS in which I work, is 13.3. Where was it a year ago? That was July, right? Complete month of July. 18.3 just last year. So we are under our supply of just the previous year. And if I pull my mouse away, you can see we're still way under for the last trended period of time. We do have a shortage now. It's actually improving the number of homes that we have available to purchase, but we're still below average. What was that we were talking about on the days on market being about 23? Where are we? 4. Okay, we're staying down here in this bottom. We are the ones who are benefiting from people moving from San Francisco to Tennessee. We're one of the states they go to. Closed sales. Do you see any significant dropping off in that cycle? It still looks fairly rhythmic. Where we're seeing a little bit of change in the price per square foot, because it was the percentage that sold over listing, that higher gain, which was making that slope so sharp. Now it's just beginning to come down a little bit. Doesn't mean you've lost any money at all. Pending sales are down a little bit, but we expect that because mortgage rates are going up a little bit. So median price, yes, it's a tiny little trend from July at 400,000, but from the peak was what, 401,000? Do you see how small that really is? So if you're a buyer who thinks that it's a good strategy to wait for the wheels to fall off, I would think that it's probably not the greatest technique to go, because we're better off than most of the nation. If you've seen the last 2 or 3 status chats, I've shown you that. And we know that you're going to fight the inflationary aspect that's making homes go more expensive. Even existing ones who already have their stuff in them, they're still going up as the price of things goes up. When you add your mortgage going up, your PITI, your interest goes up, your inflation, not inflation, your insurance goes up. Everything is going up with that root value of that house. When your mortgage goes up, what you can buy goes down. You have the 110 rule. About every 1% in your interest will cost you about 10% on the value of your home. So if we're at 5 and we were at 3, that's 20%. That's going to be about 20% less house that a lot of people can afford to buy for that same payment. So they're stretching a little higher in there to still get it, but prices haven't fallen. Our inventory is still very, very low, and housing starts are not as slow as people might make you think they are. I personally think they're just simply waiting to figure out what to build you, because builders love to build. They love to build houses, but they want to build a house that somebody can afford to buy. So right now, I think they're just kind of out there in limbo thinking, let's slow down just a tad to see what the heck's going on with these interest rates, because they're going to build you something to target a market, a particular market of qualified people. And they have to just change how they build them internally to save a little money if the prices are down. And they don't want to get them too simple for people who might not then, if the economy continues to go okay, they might not be as interested in their home. So I think they're just kind of hanging out there trying to figure out, what is all of this volatility really doing to a home that takes about 90 days to build. They need to make sure when they build that house, there's somebody out there to buy it. So with that, let's go ahead and wrap this up. I've gone on long enough. And remember, you can find the full links to these things and go look at all those wonderful little numbers and those ups and those down over on the YouTube page where the status chat is. Remember to click subscribe and hit the notification bell, because that way you can just look at this at your leisure.
Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Del to Sell. That's 1 L and Del, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today.
Well, now that we've got that out of the way, what are we seeing? Well, if you watch the several I have done in the past, these status chats, you'll see that we are not an island. But there is danger in reading national news and extrapolating it over to our market. All markets are local, yet we are not an island, because we are depending very much on travel into and out of the state. Right now, I think we have net migration into Tennessee, so we're doing better than average, but we are threatened with affordability because of inflation and interest rates. So let's get to these numbers I have right here today. Last week we had 8, 12 of 22. There were 16,192 opportunities in the Real Scout system. Remember, this is a free service for my customers. If you're not otherwise represented, you may call me. We'll get you set up a free account, and you can compare up to 3 houses side by side and room by room. Now, we had 4,104 in the under contract still showing. It was a decrease over the previous period. The opportunities increased over the previous period, and the integer ratio between those two numbers fell to 25%. This week, 8/19/2022, we had 16,429 opportunities. That increased slightly over the previous period. 4121 under contract still showing. That also increased just a little bit, not much, but just a tad, and the ratio remained unchanged at 25%. So I don't want to rehash what I've already rehashed inside of the middle segment, but you can find those links, and I do ask you to subscribe to the YouTube channel and hit the notification bell so you can see the weekly blog. It helps me to know that people are actually picking up on this stuff. Don't mind a little conversation. We can talk about it. And of course, you know who to call when it's time to sell. Call Del to sell. Also call Del to buy. I'm here to help, and I'm here for you.